We're literally on a platform that millions of people are watching. Charles Gasparino is telling you that you're going to become poor by getting involved in XRP. Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I have here with me some of the CYPRX monthly members and CYPRX students. We're going to be breaking down in detail why you should not be paying attention to this absolute garbage, why you should seriously consider joining a community of like-minded individuals that do nothing but provide consistent value on a daily, weekly, and monthly basis. And in today's video breakdown, I'm going to attempt my hardest to show you that by doing a weekly wrap up with the CYPRX members, going over fundamentals, going over why risk assets were still bullish today, and then breaking down a trade idea that we sent to the private community well in advance. And that's going to full circle into this article right here. This is exactly, and hopefully you watching this at a later date, this shows you exactly why you should not be paying attention to anything that the freaking mainstream puts out. And you should really be taking a necessary step to really educate yourself and embed yourself into a community that seriously teaches you how to come out on top. I cannot stress enough. People that pay attention, people that tap in, you guys are going to continue to win. You guys are going to continue to grow. You guys are going to continue to develop and turn into very, very profitable and profound traders and investors in this space. Okay. Even if you're just a dollar cost average, you don't have to be a day trader to tap into this information. So here we see an article, March 28th, 2024, literally feeding the juice into the minds of the masses. XRP might make you poor, says Fox business journalist Charles Gasparino. I'm not going to get into this. Apparently, today on Fox News, he went on to say in a recent post on social media, Charles Gasparino, a prominent reporter in business, warns that XRP holders might be getting poor. First of all, okay, if anybody gets poor, if XRP at the end of the day does get rug pulled, you did not assess your risk properly, you over leveraged yourself, and you expose yourself way too much to this market on high hopes betting on a digital asset. That is the most illogical thing to do. If XRP does get rug pulled, number one, you should have already assessed your risk properly, and you should only be investing in money that you're willing to lose. This article right off the bat is nothing but FUD in my personal opinion. It is literally a perspective into the likes of the bull crap that mainstream sources pump out to retail investors, because they don't tell you in this article that everybody should only be investing in the digital asset space with money that you're willing to lose, that you shouldn't have your freaking mortgage and your freaking this, and that, selling all your cars, selling all your property, selling all your home, dumping all your income into one digital asset. That's why we diversify. That's why we look into other projects. It's like, wow, man, this is just, it's getting serious. That's why I feel like something behind the scenes is brewing, because it's just been FUD after FUD after FUD. So let me show you guys how inside the CYPRX community, again, regardless if you're a DCAer, a dollar cost averager, or a day trader, the information that we are providing ahead, again, that's the most important part. We provide this information before moves play out. You don't want to be in a community where they're telling you this information after the moves play out. All right, so make sure you guys try and keep your mics muted so that way it doesn't interrupt my flow, please and thank you. Because sometimes when that happens, I lose my train of thought because I have like 1,000 things running through my brain at one time. So first, okay, let's go over the fundamental data. Let's cover why risk assets are still holding on to this bullish sentiment. Vast majority of risk assets across the board are still up from their most recent price increase. Now, why was this? Remember, I gave you guys a fundamental report yesterday breaking down all of the data piece by piece in this PDF. Hopefully you guys read it. It got 11 little fire emojis, which is absolutely phenomenal to see. However, today we got exactly what I messaged you guys in the chat before I went to sleep last night, where I said, here you all go. I just typed out a full breakdown for you all, creating a PDF going over the next 24 hours. And the only thing this PDF does not cover is if we get mixed data. For example, some upbeat figures and some downplayed readings, so just be reactive. Now, today we got exactly that scenario. Interestingly enough, we got some upbeat mixed data on the US front, where GDP figures were robust. Jobless claims came out lower than previous readings, so we still are seeing a healthy, semi-healthy labor market. right? However, on the opposite side of the spectrum, we had some downbeat Chicago PMI figures, and we did have some lower PCE readings in the GDP price index quarter over quarter report. And I'm going to go over that because on Forex Factory and on FX Street, you can't see that information. So, why is the market today still holding on to the narrative that at some point in time, the Federal Reserve and other major central banks all over the world are going to cut interest rates? Well, if we go over to the gross domestic product report, you can see right here, this is from the BEA.gov website. Now, again, remember I try to tell you guys to avoid all the fluff. You only need one little tiny sliver here to see why risk assets are still holding on to this rate cut narrative. Remember, the rate cut narrative has been driven by what? It has been driven by lower inflationary readings over the past consecutive couple of months. Well, here we can see the PCE index, including food and energy prices, increased to 2.0%, which was a downward revision of 0.1 percentage point. Remember the previous reading in yesterday's breakdown, we covered that it was at 2.1% via the previous reading, and it just came out at 2.0%, which is a downwards revision. That means it was a slight decline, albeit it wasn't significant, but it still showed inflationary measures coming down slightly, right? Okay, so remember, I just mentioned that the thing that has been keeping risk assets bullish over the past consecutive couple of months has been us seeing a slight decline month over month and year over year, so on and so forth, in inflation readings. So if we're just now seeing that this PCE index, including food and energy, came out lower with a downwards revision of 0.1%, right? That then still boosts and props up the narrative that lower inflation is still persistent. Okay. So keep that in mind. Now, I wrote for you guys real quick what this means: a downward revision in inflation, as indicated by the PCE index, including food and energy prices, suggests that the rate at which prices are rising for goods and services in the economy is slightly lower than previously estimated. This downward revision can support the narrative for rate cuts in multiple ways. And then I'll give you guys a PDF behind the scenes on what that is. All right. So overall, today we saw mixed data, not really pumping any strength, into the dollar. If we just go look at the DXY charts real quick. Okay, yesterday during the Asia session hours, well, roughly speaking, right towards the end of New York session, okay, rolling into Asia, when we had that price gap on the DXY, that was caused by Fed Christopher Waller's comments that came out slightly hawkish, where he mentioned that overall he doesn't see rate cuts on the horizon. He thinks that inflationary pressure is still too high, things of that nature, right? He pumped hawkish comments into the market, and the market reacted to that. We saw a bullish dollar. Now, today, because of the mixed data, we're not really seeing any heavy impact as the market is waiting for that PCE price index year over year and month over month information that's set to come out tomorrow. Obviously, of course, I'll give you guys a full breakdown after this video breakdown on how that could potentially affect the market. But again, just revert back to the PDF that I created for you guys. All right, so that is why overall in the crypto asset class as a whole, the market's still holding on to gains. We got mixed data from the US. Overall, it's not really having any negative implications on risk assets because we did see that slight decline in inflation. So the market's still holding on to the rate cut narrative. I believe as of right now, there's like a 57 or maybe 60% chance of a June rate cut, according to the CME Fed Watch tool. So that is still above 50%. That's still optimistic and drives optimism in risk assets. Okay. With that being said, let's move on. So back to that fundamental post that I was reading to you guys about XRP making you poor. I don't know where it went. I think I closed out of it. Okay. Let me show you guys why you should not be paying attention to that stuff and why the fact that you're embedded into this community is extremely crucial for your survival in this market. Okay. So let's just go back. You guys remember last night during Asia session, before the move played out, you can see in the screenshot, let's go to the screenshot. When I gave you guys this analysis, XRP was roughly around 60 cents and some change. Okay. And my analysis that I gave you guys was that I was looking for price to hold above 58 cents, give or take. Literally, I wrote this out. The crazy part is I write this out for you guys word for word. So you know in my brain what I'm looking for. Well, I'm looking for price to hold above 58 cents, give or take some pullbacks for market makers to discount price as we enter into a new quarter. Second thing I'd be looking for is discount for better buys into March lows or continuation buys. I don't know why that says buts. I mistyped that above 62 cents, right? Now, why was I so confident in giving you guys this analysis? You can start to layer on things in the CYPRX community that we give you. What did Usman give you guys yesterday as well on the 27th? He gave you guys scalp deltas, and you can see looking at the previous manipulated range here at around 57 to 58 cents, you can see the massive amount of buy manipulation around these deltas, a nice price increase, and important deltas for price to discount itself into in the form of buys, buy areas of interest. That if price holds above and creates the CYPRX pattern that we pay attention to, we can be looking for continuation move back to the upside. And that's exactly what we got. So not only did you have the buy deltas, not only did you have my in-depth technical analysis that I try to give you guys by literally typing out word for word what I'm looking for, but we also had mixed data not putting any bullish emphasis on the dollar driven by lower inflationary readings, right? And we know via all the fundamental breakdowns that I've been giving you guys over the past consecutive couple of weeks/months, including the Zoom calls, I've been telling you guys that as long as that sentiment, even in this breakdown last night, right? As long as that sentiment doesn't change, we continue to see the rate cut narrative remain on the table, then we're going to continuously see bullish momentum and risk assets, give or take some slight retracements. So that way, these market makers, these algorithms can better position themselves at discounted areas, right? So when the market discounts, as long as that sentiment remains firm, we should not be fearful. We should be looking at opportunities to take price back to the upside. This is exactly why you don't pay attention to freaking Fox Business News and Charles Gasparino, because here at CYPRX, we called this move out in advance. So now let's go over, again, using all the things that I give you guys. Remember, think about what I'm teaching you, right? Everybody else in the market right now looking at XRP is fearful. Yet here there's a community of over 300 people that are getting information on a consistent basis ahead of the curve, showing you guys to be buying, right? And I'm not talking about buying in a sense of dumping all your money in, but positioning yourself on the right side of the market. Where I mentioned to you guys that as long as price holds above 58 cents, we're going to continue to look for buys. Look at this. I even mentioned right here in this area is when I gave you guys that original analysis. And I said, as long as price holds above 58 cents, which is this gray zone, we're going to be looking for buy continuations. Let's just say, hypothetically speaking, you did buy at roughly around 60 cents as a DCA level. Your portfolio right now would be up over 5%, which isn't a significant increase by any means necessary. That's not what I'm touting, but it's still trading currently, given the market sentiment, currently, given the market direction, in the right direction. Make sense? Right? So you guys can see the importance of being a part of this community, where the whole entire outside perspective of the market right now is just this saturated, ugly mindset. And I just don't know why. It's literally mind-blowing that people would rather be a part and pay attention to information on Twitter, on YouTube, on the mainstream, instead of look for information in a community like this. When I make all this stuff very public, right? I make all this stuff very public. So now let's get into detail. Now let's really dig apart this trade idea, okay? We're going to particularly just focus on what I gave you guys, and that was the buy continuations above 62 cents. So how utilizing the CYPRX strategy could you guys have caught this move? All right. So for you monthly members who haven't seen this list, this is our in-depth list of CYPRX confluences 1 through 10. I've told the CYPRX members that are part of the student material that we want to see at least 5 of these confluences play out before we gain confidence to take a trade. If you don't see at least 5 of these confluences play out, again, this is how I approach the market. It's not financial advice. I don't touch the charts. I don't force trades. I don't try and all like make things up in my head. No, these are the rules that I abide by, alongside of trading in the right direction via market fundamentals. So we have that in our back pocket. Let's start to build these confluences in our head. Confluences, again, are a set of rules, a set of parameters that give you confidence to actually take a trade. Because remember, we operate in an environment of uncertainty, right? So the more things we have in our corner supporting the directional bias in which we want to trade in, the more confident we can be to expose and risk our capital. Okay. So number one, we have supporting fundamentals. The supporting fundamentals are that the rate cut narrative is still holding the most weight due to a lower inflationary reading out of all this data that we just got from the US front. Yes, we still saw some upbeat figures in the form of GDP. Yes, we saw some lower unemployment claims. Yes, we did see some revised consumer sentiment coming out upbeat from previous readings. However, that did not have any real market impact on the strength of the dollar because in the overall index quarter over quarter reading, we did see some lower inflationary readings. And we know as a community that lower inflationary readings have been what the market's been feeding on the majority of the past couple of months, right? So that means that that tiny little sliver of lower inflationary reading is most likely holding the most weight, especially considering the fact that we are about to go into a major inflationary report tomorrow, right? Think about it. Okay. So that's number one. That is confluence number one. We always want to start to layer fundamental factors supporting buy scenarios or a risk on market environment temporarily, because that all could change tomorrow. We don't know that. I'm talking about today. The second thing that you could use as a confluence is my personal technical analysis, right? So the second thing we could be utilizing is, oh, Cypress is going to be looking for buy continuations above 62 cents. So when you went to go look at the charts today at XRP, if price was hovering above 62 cents, then in the back of your mind, you could say, I know Cypress is going to be looking at the charts. Again, I'm not utilizing this as a signals group, but that's just giving me more confidence because I know Cypress has been profitable for 4.5 years. Oh, okay. Let me use that as a confluence. Price is above 62 cents. Let's see if we can see some bullish order flow, right? Okay. So that's now confluence number two. Confluence number three, you can utilize Usman scalp deltas. Well, here, let's look at this scalp delta at roughly around 60.42 and 60.86. If we go and we look at the charts, here's the scalp deltas right here. Okay. And you can see that we had a nice clean bullish move and bounce from those buy deltas. So we can see that market makers, again, Usman giving you guys accurate zones, are for a fact in control of this price action currently on XRP, where we know that these zones are predominantly where financial institutions like to buy and sell from. Well, if we can see here that during the previous New York session, market makers push price down into this area of interest, i.e. this delta that Usman gave you guys ahead of the curve, once, twice, and the third time they did, we saw a nice bullish reversal breaking all previous bearish market structure. That is when, based off of this buy from around 60 cents and a half, price pushed above my area of interest at roughly around 62 cents, which was the analysis that I gave you guys, was to look for buy continuations above 62 cents. So now that we've made it this far, let's get into how during this New York session, because the vast majority of us are New York session traders, we can use these CYPRX confluences now that you guys have all these pre-added confluences in your corner, which is supporting fundamentals, CYPRX analysis, and delta zones, right? Buys from delta zones. So you already have, before we add this list of confluences, 3 confluences backing the directional bias that you should be trading during this particular New York session. Okay. So first, looking at this list, the first thing that we look for is identifying liquidity or a set of liquidity. Now, remember, when we look for this, primarily is during the manipulation window. For those of you monthly members, the manipulation window takes place 2 hours before New York session. So for me here in California, that starts at roughly around 3 a.m. Okay. So I usually use a box tool. Now, there's people in this community that have created and coded indicators for you to have this on your charts. Get with Emiliano. I'm sure that he can give that to you. Okay. Or Dom. Dom is the one that actually coded the indicator. So you guys automatically can have the manipulation window in your charts. Okay. The manipulation window is a window where London session is passing price action over to New York. Think about it. Okay. New York session traders that are literally living in New York and work at financial institutions. At roughly around 6 a.m., just like you and I, they're waking up, they're putting on their pants, they're making their breakfast, and then they're starting to drive to work. They don't really get to work probably until like 7:45, 8 a.m. Then by 8 a.m., they're giving everybody high fives, motivating each other. Hey, let's go freaking manipulate these markets today, right? I'm just making this all up in my head. But they don't really start to move price action and make financial decisions until the news comes out at roughly around 8:30, right? If you go look at when the predominant amount of news comes out during New York session, it comes out after 8:30 a.m. Here in California, that's 5:30 a.m. So the manipulation window in which we should not be touching price action is that London, New York rollover, and that stems from around 3 a.m. to about 5:30 a.m. That is our manipulation window. That is when the market makers tend to set up liquidity traps. So using our box tool, I'm going to show you guys, putting on that manipulation window, we can see clear as day that the market makers set up traps prior to the meat of New York session above highs and beneath lows, right? So check. Confluence number one, identify liquidity or a set of liquidity. Confluence number two, we want to see these market makers grab that liquidity. We know that if these market makers are going to move price higher, they must take money from the market. That means we have to see this type of pattern, right? We have to see them grab money from a predetermined low to move price higher, to gain enough momentum, to gain enough liquidity in the market to push price to a high level. Same thing as above, so below. If they're going to move price lower, they tend to grab highs, grabbing any sell positions above highs and then dumping their positions at a premium, right? So with that being said, let's go into this price action and let's look and see if we can see a sweep of liquidity that indicates that the banks are in control. Remember, because retail investors don't have enough money to manipulate the market like this. So remember, we identified highs, we identified lows, and sure enough, right here, right after the market breaks out of our manipulation window, what do we see the market makers do? We see them push price down into a discount, and we see them sweep this low. Right? Now, as I'm going over this, keep in mind all the pre-added confluences we had. We have supporting fundamentals, we have CYPRX strategy and CYPRX analysis, buy continuations above 62 cents. And prior to us even coming into this range that we're in during New York session, we had a beautiful buy bounce from Usman's buy deltas, right? So all in all, now we have check one, identifying liquidity, highs and lows. Check number two, we see as soon as the market breaks out of the manipulation window, we get a sweep of this pre-engineered low in the market prior to New York session. Number three, we're looking for a move away from a psychological level. Now you might ask, what psych levels should we be looking at? Well, because we're trading XRP up against the United States dollar, we want to be looking at the quarter theory. That means we're looking at the 0 zeros, the last bit of the number to be ending in 0, 0, 25, 50, 75, and then the market, the cycle repeats itself. 0, 0, 25, 50, 75, so on and so forth, making your way up the ladder. So here you can see, sure enough, number three, we want to see a move away from a psychological level. Look at this. They tapped price straight into the 61725, which is a quarter theory level, straight in there. And then we see what? Number four, a bullish or bearish match of momentum in our favor. So in our favor means if we have supporting fundamentals propping a risk on market sentiment, we want to see a bullish move away from a psychological level that breaks all previous bearish market structure. And sure enough, we get that. So here is a bullish move that breaks after grabbing liquidity from a low, all of this previous bearish order flow, right? So now we're starting to see the pattern that I just drew out for you guys right here in XRP's price action, where we can see pre-engineered highs, pre-engineered lows, price break out of the manipulation window, sweep the lows, and then we see a bullish momentum move to the upside. We know that market makers are the only people with the amount of money to make this price action. So now, knowing that information, we can assume that market makers are in control of this current price action. With that being said, as traders, we have to know that what comes next is most likely going to be some type of continuation move. Now, what does that usually come in the form of, right? Well, we know that bullish order flow consists of what? Higher highs and higher lows, higher highs and higher lows. So our goal as traders is to get in on one of those pullbacks and another higher low, turning into a bullish move that takes price higher. So how do we catch this pullback? We use confluence number 5, identifying break of structure properly. Okay, so we can see here, this now is our new bullish range in which we want to be operating in, because this bullish price action broke all of this previous bearish market structure. So this new A to B move is now our new trading range, right? So now that we've identified a break of structure properly by seeing that these candlestick body highs have closed above this previous lower high, we can now assume that this is the new bullish range that we're operating in. Number 6, placing our Fibonacci properly. How do we do that? A lot of people ask, how do I know when to place my fib? Personally, I don't place my fib until the bullish move that we've seen that broke previous bearish market structure has pulled back at least 25%. So in this one bearish candlestick right here, when the market started to pull back on XRP, that is an over 25% pullback from the low of this previous bullish move. So taking our fib from the low to the high of the range, you can see that in this one bearish candlestick, it almost equated to about a 50% retracement, right? And you had plenty of time to do this because remember, we don't usually execute trades until price comes down into at least 62% discount. Well, here you can see that once this bearish candlestick happened, this is on the 10-minute time frame. So the next candlestick still didn't even touch down into 50% discount. So you would have had plenty of time today, looking at where price action was after this pullback, you would have had plenty of time after this bearish candlestick took place to take your fib from the low to the high by saying to yourself, this candlestick corrected at least 25% of this previous bullish move. So now we're done number 6, placing our Fibonacci properly. Number 7, confirm discounted price matches with psychological levels. So here we can see 62% discount to 70% discount. 79% would be preferable, right? That's our sweet spot. So we can go ahead and we can get rid of our Fibonacci. So now this is the area in which at a minimum we would like to be buying from if we're going to be looking to take buy positions, right? Does it match up with psychological levels? Absolutely. Here you can see a buy position and we can see placing our psych levels on. It matches up roughly with around the 61925, the 61950, and the 61975, right? So these would be the psych levels in the form of discount you would like to be buying from. So number 7 is out of the way. Number 8, all that's left to do is to wait patiently for discounted price to get the best risk to reward, okay? Your risk to reward, at least here at CYPRX, and what I aim for is at least a 1 to 2 to 1 to 3 minimum. So with that being said, this is when you're going to zoom out and you're going to start to conjure where you're going to be placing your stop loss logically and where you're going to be placing your take profit logically, right? You don't want to be sitting there thinking that price is going to go to new all-time highs when you're trying to scalp the market or enter in for a DCA position. You're just looking for logical entries and exits. So a logical area of interest, let's talk about stop loss first. What would need to happen right now via where price action is at to invalidate our bullish bias? You don't have to answer out loud. Just think in the back of your head. What would need to happen to this price action right now to invalidate our bullish thesis? We would need to see a break in market structure. So we would need to see this previous higher low broken. Why is this a higher low? Because we can see clear as day, this low is lower than this one. So this is a higher low that takes price to a new high. So logically speaking, in order to see a price reversal, we would need to see this structure broken, and then we would need to see a new lower high, lower low formation. So with that in mind, the most logical place for us to put our stop loss would be beneath these lows, right? So that's where we would place our stop loss. Take profit, okay, would be somewhere targeting previous highs. 1 to 1 would be targeting this high. Zooming out and looking at previous areas of interest where we could be taking profit from, I personally like to look for equal highs. I like to look for areas of quote unquote resistance. I look to look for previous areas where banking institutions sold from. So we're just going to look back during the previous New York session where we can see New York session traders here in this area started dumping their positions. So that would be take profit number 2. And that puts us at roughly around a 1 to 2.5 risk to reward ratio. Take profit 3 could be over here to the left-hand side where Asia session the previous day started dumping their positions. Because we know if market makers are not going to target lows where our stop loss is, what are they going to attempt to do? They're going to attempt to target liquidity above highs. So now, looking at the CYPRX confluences, waiting patiently for a discount price to get the best risk to reward, does this trade setup, and remember, we're on the 10-minute time frame, so for people to think that we wouldn't have enough opportunity to do all these steps is, again, a way of thinking. You would absolutely have plenty of time to take all these necessary steps, okay? Now, after waiting patiently for discounted price to get the best risk to reward, we covered set take profit targets and stop loss areas. Last thing to do is to conjure proper risk management, no over leverage, and then having confidence to enter into the trade when it comes into discount, right? So now look, check this out. All you would have had to do is wait patiently. Boom, price taps into our discounted area of interest. You execute the trade with either market execution or a buy limit. Take profit 1 was hit right away, which was these previous highs. Take profit 2 was hit almost instantly, which was the previous New York session highs. And take profit 3 was also hit, which was the previous highs above the previous Asia session, where Asia session traders the previous day started dumping their positions. This was a beautiful risk to reward ratio covering every single thing that we go over in the CYPRX course, right? Starting from the beginning. We had supporting fundamentals, driving risk sentiment, which were lower inflationary readings and mixed data from the US, not really propping up the dollar today, right? We know that when the dollar isn't necessarily strong, because it has been strong over the past consecutive couple of weeks, albeit it wasn't really intraday strong, we know that that usually tends to prop up risk assets, which we're seeing across the board, right? We also had my analysis that you could have utilized, which was buy continuations above 62 cents. Is price above 62 cents? And was it above 62 cents today during New York session? Absolutely. You also had Usman's delta zones that you could have been utilizing, where you can see that he dropped delta zones yesterday, the day before this trade idea played out, at roughly around 60.42 and 60.86. And you can see that we had a nice, beautiful buy bounce in institutional momentum, or whoever's in control of this market, buy up XRP from this particular delta zone, right? Then, additionally, we have all the CYPRX confluences playing out to the literal absolute T of a degree. All that's really left for you to do, being a part of this community, is control your emotions and control your risk. Not paying attention to the article that I showed you guys at the beginning of this call, where literally on a platform that millions of people are watching, Charles Gasparino is telling you that you're going to become poor by getting involved in XRP. When I just showed you step by step how inversely you can actually be making money on XRP, right? It's insane what's happening right now, and I cannot stress how valuable it is that you guys are part of this community right now. Even if you're new and you're just now soaking up all this information, and it seems like a lot, trust and believe I went through that process, and so did many other individuals in this community. But over time, you will start to learn these confluences. You will start to learn that they play out as above, so below, inversely as they do to the upside, right? And you will also learn how to trade in tandem with risk on, risk off market sentiment, right? So that's my spiel today. As always, trying to give you guys the realist analysis ahead of the curve. Phenomenal buy continuations above 62 cents today on XRP. Let's see how this inflationary report comes out tomorrow. Remember, tomorrow, ideal scenario for risk assets. In my personal opinion, it would be extremely bullish if inflation came out with a decline tomorrow, because the vast majority of algorithms and market sentiment surrounding tomorrow's news is expecting the data to come out higher. We can see right now the dollar is propped up above the 104 key major psychological level. We are starting to see some strength pick up in the dollar before the fundamentals come out. In my personal opinion, again, breaking down why this is, let's stop the recording real quick.